All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
Today we're going to talk about a video people have been asking for. Both, I think it was VIB and LP, two of our subscribers, asked for Discovery stock analysis. I own a little bit of Discovery, but I want to take it a little deeper dive and see what it really could be worth in a couple of years.
If you like this kind of entertaining stock market content where there's two stupid guys trying to figure everything out, give us a like and subscribe.
We'll get to it.
Two Stupid Guys Trade Stocks.
Quite an assortment of icons in the background here, huh? 90 Day Fiance, isn't that like your favorite TV show?
Yeah, I watch it like 3 or 4 hours a day.
Yeah, that's what I thought. Kind of figures.
Do you have I haven't seen this presentation. Do you have the fun little drop?
Fun little drop?
And the stock chart?
Oh, no. Well, maybe.
Oh, you do. There we go. Okay. It's the next slide.
Yeah. The Archegos kind of collapse here. This is what Discovery's 1-year stock chart looks like. It's very interesting.
Yeah.
As trying to be more of a value-oriented guy, the stock chart only tells me what I can buy it for today. It doesn't really tell me much in terms of what the company's actually worth, because in reality, it's a meandering walk around central price is what I think of as far as like a value-oriented guy.
Yeah, this is where Vinny excels and I don't do well.
Yeah.
Finding
we'll see. But this is another interesting one too. It makes you feel a little bit better about our own performance sometimes in our stock market portfolio. So AT&T bought Warner Media back in 2018 for $85.4 billion. And this deal, where it would be spun off and joined to Discovery Group, values them at about $43 billion, right? Meaning that AT&T managed to lose 50% of the value in 3 years.
That's pretty impressive. It's not easy.
Negative 49.6%. That's not quite Wall Street Bets pro level, but that's pretty impressive.
That's just my year. That's terrible.
Yeah, that hurts a little bit. So this is kind of the structure that they're proposing to take place here. AT&T will spin off Warner Media, and Discovery will kind of form this new company with that spinoff. And now Discovery basically will get shareholders will control 29% of this new company, and 71% will be controlled by AT&T. Shareholders receive that as a dividend. It actually just we're recording this on January 2nd. On December 28th, this structure received kind of tax approval from the U.S. government in terms of not being a taxable transaction for AT&T shareholders.
Okay.
And also in the last week, this merger has been received approval from the European authority. It still is waiting U.S. approval in terms of antitrust, but it got the green light from Europe. So
okay.
Kind of an interesting time from that standpoint. Now, it's not exactly super clear in terms of what the new entity will assume in terms of, at one point here, if you look here, it says $43 billion of debt. Then another point is here, it says in combination of cash, debt securities, and Warner Media's retention of certain debt. So it's unclear exactly what the structure is going to be like, but in around $43 billion is what this new entity is going to cost them for the Warner Media assets.
Okay.
And, this is kind of an interesting thing as far as, my standpoint. I don't know about you personally, but I am both a subscriber of HBO Max and Discovery Plus. Do you use either of these services?
So Discovery never. HBO every February for the last 8 years. Whenever Game of Thrones was on, and then we cancel it. But that whole, it's kind of a game changer. The whole all Warner movies on HBO.
Yeah.
Now everyone I know has HBO. Like I just watched The Matrix without going to the theater.
Yep, the same. I actually watched it last night.
Yeah.
There's
that's pretty wild.
20 million direct consumer subscribers for HBO Max now. That's 20 million subscribers, paid subscribers for that service. I personally don't pay directly for HBO Max. As of now, this company's kind of splitting up, but I have AT&T for cell phone. I had DirecTV for satellite, and then because of that, I got HBO Max free.
Free.
Yeah.
So HBO Max is under Discovery because it's being split off from AT&T.
Exactly.
So after it's split off, the revenue of HBO Max goes to Discovery stock.
It will be a new company called it's Warner Media Discovery.
Okay.
They're forming a new entity. They haven't exactly said whether or not they plan to keep the two streaming services or if they're going to combine them into one streaming service. The interesting thing to me is that they feel like they have different demographics. You're going to laugh at me for this, but the Discovery Plus, the reason why I have that service is actually my mother. My mother is a 90 Day Fiance, a Food Network kind of viewer, and she was the one who wanted this Discovery Plus. So I was like, all right, I guess we can share it.
No, I completely agree. They're two completely different demographics. I don't think you gain anything by joining them. I think you actually lose something.
Exactly. So I wanted to look at as far as like where that they are, if this combined company would look like in terms of comparison to other streaming services out there. Now, the fortunate thing for these companies kind of coming together here is they have a tremendous backlog of content. This isn't like Netflix had to create their own from scratch, right? Granted, they've had tremendous success with a lot of it, but they're going out and producing this stuff. This is assets that these companies already owned that they're able to just monetize in a new way. I mean, MythBusters, how long has that show been off the air?
Yeah, for a long time. I mean, it's almost kind of like Disney when they created their stuff. They had they had way more stuff. To be clear, they had 100 years of stuff, but it's kind of like they don't have to immediately start off the bat with a bunch of new content. They have tons and tons of archives of stuff.
Exactly. They don't have to go out and invest a bunch of money just to produce the first content. I mean, look at this right here. 200,000 hours of video content.
Well, like 10% of that's Lord of the Rings, the extended cut.
I mean, maybe.
So
pretty impressive. I definitely found myself working through some of the backlog of various things here. Looney Tunes is not nearly as funny as I remember it. I'll tell you that.
I agree. It's never a good idea to watch stuff you liked as a kid. I learned that. It ruins it.
Yeah, it wasn't as good. This is what they're basically saying that the combined entity is going to look like in 2023. They're expecting full approval and the merger to go through in around June of 2022, so about 6 months from now. There's even a rumor it might be a little bit sooner than that. So they're saying they're going to have $52 billion in revenue as a combined company with $14 billion in EBITDA. All right,
okay,
pretty impressive. They're targeting about $15 billion in direct consumer revenue, which is growing, and because of that growth, their margin is going to continue to expand over time. The other interesting thing that I think this company offers that Netflix and Disney are behind, I think, in terms of is this switch of advertising dollars from kind of traditional cable subscribers to the streaming services. Discovery having so many platforms out there, as far as they have HGTV, they have the Food Network, they have Animal Planet. They have a lot more experience in negotiating these advertising deals, I think, than Netflix does.
Yeah, that's true. Netflix doesn't have any.
Yeah, exactly. They think that they can get about $3 billion in synergies. There was a kind of a report out there. The CEO said that he actually thinks it could be even higher than $3 billion in synergies by combining the companies. Now, the kind of elephant in the room is that this combined company is going to have a lot of debt. All right. And they're going to have to quickly use their cash to deleverage and get that back down to a reasonable level. All right, so yeah, I know. This is what you're looking at as far as like revenue, and then that EBITDA, pretty impressive. They are going to look at closing around a 4.5 leverage of EBITDA leverage, which what your goal is typically.
I don't. Anything over 2.5 isn't great.
3 is kind of what's considered like senior money. That's what you try to shoot for, because when banks are lending to a
business,
business,
you get too leveraged, don't you have to pay the premium beyond
exactly.
that?
Yeah, exactly. Anything over 3x is usually charged at a little bit of a higher premium as far as borrowing goes.
I remember that because we looked at Fubo and I wasn't very happy with the numbers.
Yeah. See, this is that report I was talking about. The Discovery CEO, John Malone, who's a shareholder of Discovery, sees it actually more like $3 to $4 billion annually in terms of synergies between the two companies, which is great. They'll have a wider margin, right?
Right.
Now, this is what I was talking about. The European Commission grants approval for Discovery acquisition of Warner Media, so they got the green light for that aspect of everything. They also are now going to be awaiting the Department of Justice. This was interesting. It was kind of funny that when DirecTV was what do you call it? Kind of combining with Time Warner under the AT&T umbrella. That at that point the DOJ actually did sue to block that transaction. However, it was.
But now it's okay.
Well, no, this is the U.S. Department of Justice, which was not yet signed off in this transaction. I'm saying that when Warner Media tried to join AT&T, that at that point there was a lawsuit against it. The gentleman that spearheaded the lawsuit, I forget his name, is no longer the kind of on the Department of Justice, but definitely
That's
something interesting. He was a little bit worried about the vertical integration of cable provider DirecTV and Warner Media being under the same umbrella, which is not a problem for this transaction. This is more of a horizontal kind of merger rather than the vertical.
Right.
So I want to give you a little idea as far as like price to sales and kind of look at where Discovery is compared to some of the other streaming services. So I looked at this Netflix and Discovery here. Pretty impressive. Lower is better when you talk about price to sales. Only a 1.3 price to sales for Discovery, almost 10 on Netflix, and a 4 on Disney.
The thing that you have to factor in though is a lot of debt.
True.
DISCA has way more debt.
True, very true.
And Disney and Netflix have a much easier time making money.
Disney's got probably more debt than you realize too. But I'm gonna use actually a different metric as far as valuing the businesses that helps account for the fact that they're going to be highly levered.
Got it.
Yeah. I also want to give you an idea of like where are they subscriber count wise, right? So Netflix 200 million, Disney 118 million. If you actually combine Discovery and HBO, this is using HBO's kind of I forget the word here, but not just the direct to consumer business, but also like their media side of everything. Looking at about a little under 90 million subscribers.
Okay.
But that's subscription via traditional method, DirecTV, cable providers. And then also the direct-to-consumer stuff. But, they're not small potatoes. And honestly, in comparison, they're much more in line with like these kind of two big boys, like solid number 3 kind of position.
Do you remember when Warner Media said it was okay for HBO to put on like feature films that go into the theater? Was that like 2 months ago?
Yeah, that was for the entirety of 2020. That was supposed to be. I'm sorry, 2021, the entire release schedule.
And then they just said it was okay permanently, right?
I'm not sure if it's been given the permanent green light. They said that no, they will be going back to theaters at some point in time. However,
because that's going to hurt.
Well,
that's the only reason I have HBO. That is it.
Yeah. I mean, no, that's an interesting question for sure. Something they don't want to shoot themselves in the foot with, but they have to. They were creating these movies regardless. It all depends on whether or not they where they think you can get the best like dollar, right?
Right.
So I looked at this is AT&T's most recent quarterly statement, and this is Warner Media segment broken out. You look at a pretty consistent like $8-9 billion in revenue for the most part. Some in that ballpark. Let's call it around 8. Most recent quarter 8.4, and a pretty solid margin here as far as EBITDA goes. $3 billion, $2 billion. Pretty solid across here. $2 billion most recent quarter. So this is a business that is cash flow positive, which is fantastic. Right. About 25% net rate.
Right.
Now, what are we going to use as far as valuation here? As we just talked about, it's kind of tough with the leverage here. So using your traditional stuff, PE, EPS, free cash flow, it's not really ideal when you're talking about this one's leverage because most of the business value is that debt, right? When you look at it at full business value, enterprise value, basically that consists of the loan you've taken on the business, the debt, and then the actual value of the business of what it would be worth in like the free cash flow market, and then your equity. Right? And the shareholders, we own that equity portion. So that's why I use this enterprise value to EBITDA ratio. This whole thing, looking at my math, about 4.36 leverage for 2023. Ideally, we want to get to under 3. I looked at some of the other streaming companies and looked at what their enterprise value to EBITDA ratios were. What do you think of this, huh?
Viacom is unbelievably surprising.
Yeah, Viacom's pretty cheap, but CBS is their major property as far as I'm aware. Does that have the same moat or panache, I guess, that Warner Media does or Discovery? No, I don't think so. I
think that's slowly dying over time.
I literally consider getting Viacom just because I want to rewatch all the episodes of CSI.
That's like 50 seasons of all their spinoffs.
Wow, just the Vegas one. Okay, Gil Grissom's the man. No one else.
Oh, okay, because there's like 5 CSIs.
I know. Now I gave them a kind of a middle of the road enterprise value to EBITDA ratio here of about 15. I looked at Morningstar's report, and they were giving them about 13 enterprise value to EBITDA ratio, and looked at what that would do for their stock price. So a lot less than Discovery or Netflix, which are kind of the preeminent companies in the class, but a premium over like Viacom. So I felt pretty safe with 15, and that gives them a value of about $46.67 a share. This is looking at 2023 numbers, that $14 billion projected EBITDA. So yeah, I already own some Discovery stock, and based on this, I am going to allocate a little bit more capital towards it. Exactly how much I'm going to do, I'm not entirely sure about yet. It depends on how the market continues to play out here through January, because
What's your buy-in price?
I'd have to look at it, but it's probably about mid-20s, about 25. Right now, it's trading at like 23.50.
Okay, so you're at about where it is. Because to me,
Yeah.
so I'm looking at the chart on your slide 2, and because it doesn't like do the whole merger deal or reverse merger deal, I'm gonna say it downtrends to like $19 until the deal happens. Because it's been in a downtrend for ever since that ridiculous drop for what is that, 8 months?
The Archegos Capital thing.
Yeah. I feel like it's probably just going to keep on going until it actually happens.
Yeah. I mean, that's fine. That's a great accumulation phase if you have more time to buy it. Like I said, we had a couple of regular viewers that were asking about this, and like I said, I bought some. Even Birdie was in DISCA, but he sold out of that his most recent 13F filing. So I'm not sure why he changed his thesis on that. But even from his standpoint, he was looking at it as a valuation. Now, the different share type there too, which is not something I'm particularly familiar with. I based mine on Disc A, the kind of Class A common share.
Makes sense.
Yeah. All right. Guys. Yeah. What do you think? You gonna buy some Discovery?
No, I'm gonna buy more Baba.
It is tempting. I know. We'll see. But my investment thesis on Baba was to see what would happen in January, but we're there now. So first trading day of the year is tomorrow.
Yeah, it's gonna be iffy. All right. Yeah. Thanks, guys. Tell us what you think.
Yeah, catch you in the next one.